Hello, everybody. This is Joshua Hayes at BigWaveTrading.com coming to you with this weekend stock market wrap-up. I'm going to go ahead and start at the S&P 500, and I'm going to go ahead and use the Zoom 4 because we already know that the market's in a downtrend. I've gone through my videos over and over, and we know that the big trend's down. So let's just focus on the last 3 months. I want you to notice that off the November lows here, volume during the November lows was smaller than in October or September. If we were going to have a capitulation bottom, it would have come in October. With November sell-off coming on lower volume, what we then needed to see as the uptrend moved higher was higher volume. We got that on the initial day one, but as we went along, volume fell off, just fell off the train. Then we had a distribution day at the beginning of December, and since then we've had one more. The key, though, here is I want you to notice on the 2 down days, we close at the low of the day after starting off near the high of the day. However, during that time, we do have a market looking like that it's in a short-term uptrend, but there has been very little accumulation, even though these 2 days here in December were accumulation days. Since then, it's been very small. Now, I do know on Investors Business Daily it shows volume higher by a little bit, and on here volume's lower. But let's just pretend it was even, and then that makes today's day, with yesterday's loss, still an overall negative 2-day session. Also, notice how the 50-day moving average is acting as a wall to this stock index. It cannot get above this wall, this 50-day moving average. Until the S&P 500 can actually get over the 50-day moving average, there shouldn't be anybody out there that's actually a bull on this market. There are a few stocks out there that look like they are bottoming, and I'll go over them in part 2 for my subscribers this weekend. I thought we'd have a part 3, but we're not going to have a part 3. There's not enough out there. But there just isn't enough with enough continued success, and the breakouts are all failing to have me even believe that this short-term rally can turn into even an intermediate-term rally, much less a long-term rally. So I'm still do not think that we have seen the lows of the stock market. You get the Madoff case that's $50 billion. Who knows what else is out there? I just don't know what else could be out there. I really am ashamed to see my country I did not think was going to turn into this greedy, corrupt kind of nation that we've turned into. It is sickening to see what's happened after the 90s. And it was all, I guess, put in motion in the 80s. It seemed so innocent then, but the 90s, it was just pure greed. And even though I thought when I got started off in this in 1996 that it was the beginning of the boom, it turned out that I was getting involved at the end of the boom. And I did not know that, but I'm addicted to the market, and I will be involved with this market till the day I die. So I have time, and I can wait till the proper setups actually set up, break out, and work. When the proper setups do come, I will know what to get long, and I will know how to get very heavily long the few stocks that I get involved with early on. Then we can start rotating into other winners and build huge returns during the next bull market. Right now, staying short or being in cash is the only right play, because not only is the S&P 500 not looking that great, but neither is the Dow Jones Industrial Average, as it had an up day yesterday, but overall in 2 days it's still down 1.5%. Volume was lower than the day before, and as you can see, since the uptrend started, it's just not going anywhere. And whenever we look at the NASDAQ, we can see the exact same thing. It's just not going anywhere. And the 2-day total for this, negative 1.6%. Volume was also lower than the session before. The good news is that the relative strength line is getting a little bit stronger for the NASDAQ, which tells me that techs are getting a little bit of a bounce right here. But a bounce is just a bounce until it turns into an uptrend. A bounce is still just basically setting you up for better shorts. And like I keep telling everybody, this week, about 25 of my 37 short holdings that have been big winners for me have given me 0 full cover signals. Now, in 2002, before I started to go long stocks like Sina Sohu Netis and a couple other Chinese ones, and then there was Stratasys, USNA, Garmin, and a few others. I believe ERES was another one that I haven't put up yet on my website, that these stocks all, before they even broke out, stocks that I was short already gave me full cover signals by having a huge session on higher volume like the indexes here in September and October did, but with the price actually closing above the 50-day moving average. That told me to get out. I didn't even need to wait till the 200-day moving average came down. Just get out now, because the huge volume told me that something was going on. I can't see this in any of my stocks. I just can't. I'll show you General Motors and Ford to my subscribers in part 2, but the indexes just really don't signal to me that we're near a bottom, and the stocks that are involved in these indexes don't have those kind of huge reversals off the lows that tell me that we're at a bottom. The only positive thing I can say is that in part 2, we'll look at some stocks that are showing some strong technicals, but the technicals underneath you can see are weakening a bit. So even now, it's not that great. The one thing that we lack on any day is pure accumulation. We're not getting any huge accumulation on the uptrend, and that's one thing you need on a rally. And as you can see with lower volume, each of the 3 weeks that we've rallied, we're lower, lower, and lower. That's not a positive for a market moving up. Considering it was moving down on this weekly chart initially on huge volume and began the sell-off on huge volume here, July, August, September, here, October, November, December, as it topped, churning. And here in 2008, January, February, March, when everybody argued with me, telling me that all of it was a buying opportunity, we can see that this rally isn't that healthy. Another little thing that you should notice, too, in these is look at this price pattern here. Do you see this little hump here? It kind of looks like it wants to roll over. Now, if it breaks out above the 50-day moving average, all this is moot. And then we can go on to looking at stocks for potential longs. Or possibly just look at getting reshort against the 200-day moving average as low volume takes us higher, which it could with the Christmas rally into the holidays and into the New Year's. However, it looks to me that we have a little bit of a hump in here, which indicates to me that the market might want to roll over. And considering that we're moving higher on lower volume, it's not necessarily a bullish thing to see a small hump. As you can see, the hump that showed up here led to lower prices in the Dow Jones. Want to see how much time I have in my video? Okay, let's go ahead and hit the commodities. Platinum, still in its consolidation area. I expect it to break out to the upside. However, if the trend remains and stays, it should break out to the downside, but I don't know. Silver, this is why I think platinum will break out to the upside. Silver's retaken the 50-day moving average along with gold. And if gold can take out the 200-day moving average, that's a long signal. And if it goes back below the 200-day, you you sell your long. But for right now, you should have, if you wanted to go long gold, you should have taken a small long here. And then you should be looking to take a big long if it gets above the 200-day moving average. However, it re-rolls over, gets below 50-day moving average, cut your loss and get out. Another not bearish yet, but not bullish either, is the United States dollar. After it broke below the 50-day moving average yesterday, it actually continued and sold off a little bit more today, giving it a 2-day total of a negative 2.22%. The one good thing, look at the baby tail here and the baby tail here. This indicates to me that intraday, as the index went to its lows, people came in and accumulated and bought the stock and lifted it up off the lows. And what it indicated to me here, same thing. Before, as it hit its lows, people found a bargain as it is below the late November support there, but right around the November support around, let me get the date right, 10:30 and 11:05. Since right around there, bargains have stepped in maybe, and it could possibly put it up. However, until it gets back above the 50-day moving average, you would not want to go long until it's actually above there. So right now, you can be long silver, gold, be looking long, go long platinum. You should have sold some of your dollar long from the long that you would have taken in August. And right now, you're not going to be a full seller of the dollar until it closes below the 200-day, and you're not going to go full out with gold, silver, or platinum until it's above the 50 and 200 days. So until that happens, there's not really anything you need to do. One thing I did find strange is that the VIX fell, and actually, well, it was the VIXN, wasn't it? The CBOE, NASDAQ Volatility Index. That the NASDAQ yesterday was down 3%, but the VIX, instead of going higher with fear, actually fell. And then once again with the NASDAQ slightly down, it goes down, but still to actually fall on a down day, that was just mind-blowing. So the VIX will probably start ticking up again if we sell off. However, if the index gets above the 50-day moving average, hopefully some of these stocks I'm about ready to show you in video 2 can break out and we can go long, and some of the stocks that are building bottoms can now build right sides of bases and go higher, and hopefully we can get long again, because that's where I make my big money. However, we got to admit, considering what Madoff has done to investors, considering what Huebner has done this year, considering what Bill Miller has done this year, considering what Columnos Growth Fund has done this year, considering what Jim Cramer's Action Alert Portfolio Plus has done this year, all of these guys have lost between 40% and 99.99%. So they're all down over 40% with their buying stocks on the way down to then get big gains. So all the big gains you would have ever gotten from these guys have been completely wiped out. And I know one thing, with me, you didn't lose much this year. My worst portfolio is down 13%, and I received that portfolio in November of 2007 after the stock market topped. Yet, I'm not down 40%. I'm only down 13%. So the thing is that you got to watch out. Don't follow and don't listen to these guys. They're famous for a reason. They've already had their day in the light. This is Joshua Hayes at BigWaveTrading.com. We've run long. Aloha.